Hello everyone and welcome to my video. Right, so today I want to talk about the entire market as a whole. Right, I'll be going through a few reasons of why I think that the market is going to be where it's going to be in August. Right, so the long story short is that I think that the stock market, right, Nasdaq or S&P is going to crash in August. Right, so over here you see the S&P, sorry, the Nasdaq. Right, so this is the CFD from Oanda. Right, you can see that I have some proprietary indicator over here. Right, so this is basically just RSI divergence with price that I've coded this. Right, and if you have been following me, you know that I've been trying to catch the top for Nasdaq for a while now. Right, so yeah, for example, this Nasdaq short where I give multiple reasons. Right, I mentioned Fibonacci extension level, RSI overbought for the third time. Right, a rising wedge force breakout, and then eventually it broke down. Right, and then head and shoulders on a 1 minute time frame. Right, so this is when Nasdaq is at its peak, where I call for the short. Right, so so over here you see that it has already came down, right, and then it retraces. And over here, I think it's a good opportunity to put in another shot if you have already missed this opportunity, right? And obviously, one of the reasons is that I have this price divergence on the hourly, right? But let me just go through again, right? Why a lot of people are perplexed, right? Including professional traders, why the stock market keeps going up, right? So one of the things that people do not know, right, is that there is actually a kind of a stealth liquidity pump that is indirectly being funded by the Fed, right? So what is this exactly, right? This is actually what the overnight reverse repo, right? So over here you see what I have is the St. Louis Fed data, right? And this is the overnight reverse repo agreement, right? I will not explain too much on what this is, right? For those who are interested or those who are more financially savvy, you can go and read up more on this, right? Or if anyone is interested to understand more about this and why is it actually a stealth QE, right? You can let me know, right? And I may do an entire episode just to educate you on this. But for now, you can take it as that this is kind of the quantitative easing, right? That is indirect from the Fed, right? So over here, you see that actually as of 30th September 2022, right, where this balance is at the highest, right, it has been constantly being drawn down, right, being drawn down until we are at this point where it's almost empty, right? So now, August 4th, we are at 125. This is billions of dollars, right? But compared to over here where you have, I think this is 2.5 trillion, right? This is considered a very small amount. And if you look at this, we actually reached less than 100 billion. That is on the 1st of August. Okay, so this liquidity is slowly drying up, right? And I believe if you just look at how it has gone down, you will be maybe mid to end August where you'll be totally flat, like zero, right? So this is the stealth liquidity, right, that is being pumped into the market. Okay, so this is the reason why even though the Fed official balance sheet has been going down, right? They say that they are not buying, right? But this indirect way is actually providing the liquidity that the market has been enjoying for the past 2 years. Now let's go back to the technical part of the financial markets, right? So if you have been following me, you know why I call for the Nasdaq short on the technical side, right? And this is the Nasdaq again, right? So we look at multiple markets when we analyze this. So one of the other more important one you look at is dollar yen and gold. I'll go to gold first, right? So gold is a long, right? If you have been following me again, right, you know that I have called for gold long for most of the time actually, right? So if I have to type, for example, gold, right, most of it is long, and I provide the explanation for it, right? On the other website, right, I also go through, right, that this entire big move, for example, right, this is wave 1, wave 2, then wave 3, and then we are in wave 4, right? So this to cut the long story short, wave 4 and then the wave 5, right? So gold is risk off asset, right? So if the market is going to risk off, then gold goes up. Okay, so over here, technically speaking, we should have completed wave 4, right? And in the previous video, I mentioned how this bottom trend line changed, right, from being a symmetric triangle, right? It was cut down, and then now it moved back up already, and then the shifting of this trend line. Right? So now we are firmly back into the into this symmetric triangle, right? And likely will break out of this. Okay, so for gold is another reason, another telltale sign that we are going to a risk off mode. Then we go into dollar yen. Now dollar yen is a quite a peculiar case, right? So for those in the financial markets, right, for the longest time, you will historically remember that dollar yen is also a risk off kind of asset, right? So if market is going down, right, a yen will go up, right? Because yen is historically a safe haven currency. But let me just update on this, right? On my personal observation, and also the fundamental reasons for dollar yen being the safe haven currency is actually not that strong anymore. Okay, not that strong. Okay, but we can look at the technicals again, right? I've been publishing dollar yen also, right? Although not as frequently, but you have seen that I have already identified the completion of the 5 wave together with the head and shoulders here, right? This is the head and shoulders. Okay, and then over here we are going to wave. We should have completed wave 2, right? So this is the wave 2, right? It will be an ABC, okay, or if you like WXY, up to you. Okay, so this 1 2 3 4 5, then X 1 2 3 4 5, right? So we should have completed the dollar yen correction for wave 2, and now we should be going to a wave 3 down. Okay, so this is for dollar yen. Okay, so dollar yen landing from its historical significance as a risk-off asset, right? It also tells us that the market should be going to a sell down, right? And because this is going to be a wave 3, right? What this means is that likely the equity market is going to crash. Okay. Now, the other thing is Bitcoin and Ethereum. Okay. Now for Bitcoin, I have identified this entire wave, this entire move as a wave 5. Okay. The only thing that could be problematic right now is that from the wave that I have identified, it seems that there's still one wave missing. Okay, there's still one wave missing, and that is if I don't consider truncation. Now, if I consider truncation, right, that means that somewhere along this wave, I'm talking about this from wave 4 to this where I label wave 3, there is a completion of 5 wave, or maybe even here or here, there is a completion of 5 wave, and there is a truncation happening, and that will means that Bitcoin and Ethereum has already peaked, Okay, so that there is a way to count it, but I will not go through it in this video, right? On how this could have been a completed wave, right? That means that Bitcoin has already peaked. Now, so assuming that there is a truncation happening and we have already peaked for Bitcoin, right? If you look at the big picture here, this is in any case a fifth of a fifth, right? Even if it's going up, so it has already kind of ended, or rather, is nearing to the tail end. Okay, so it also tells us that likely we are going to risk off. Now, there is this argument on whether Bitcoin is a hedge, right, against inflation because it's against USD, for example, or is an independent asset class, right? That it is a hedge against market volatility. Now, maybe at the start of Bitcoin, it really is, right? But what I've observed for the past 1 year is that increasingly this asset class has a high beta with the financial markets, with the stock market, right? It could be the integration of Bitcoin into the financial systems, right? A lot of those big funds, banks, they have incorporated Bitcoin or Ethereum into a product, right? It could be exchange traded or structured product, right? And this means that this product itself, right, Bitcoin, also being in a CME as a futures, right? This product itself is now tightly integrated in the financial system, right? Together with the rest of our more traditional products. And that could be the reason why the beta is so high. Now, I'll just quickly go through Ethereum, right? Because I've talked about Ethereum, right? So Ethereum itself, you can see that I've also drawn out this wave, right? But the thing is, Ethereum, I can also break this down into a 5-wave structure, right? But even if I don't do it, you see that I have a 5-wave here, right? And then here I have a 2 5-wave, right? And a 3. So it's 5 3 5. What this means is that this could be a ABC, a wave 2, right? Ignore the other waves here, right? If you just focus on this period, right? This period from mid-December 2024 until now, right? This entire move could be a start of a new wave, a correction, and then a move down. So if you believe that the crypto, like I say, right, is now also a risk-on project, a risk-on asset class, right, then what this means is that it also signals, if the picking of it also signals that the equity market has peaked, right? So what's going to happen, right? The how is the picture going to be like? So that the stealth liquidity, right, is drying up. That's one thing, right? And the other thing is that we have not seen a rate cut, and there's a push for a rate cut, right? Now, for those of you who do not know, right? Actually, most of you would not know. Even professional traders would not know. Is that whether the Fed will cut rates is determined by the this 3 months bond yield, right? So as long as it is within the target rates, right, which is 4.25 to 4.5, right, the Fed will not cut rate. Okay, because you need to understand the mechanism for this so-called rate cutting. The mechanism is actually like this. It's actually mostly by supply and demand, right? And if the Fed says that they are going to lower the target rates, and if the target rates are not there, right, then they will go in, they will intervene in the market, and then they will buy up, right? That is where it will contribute directly to the Fed balance sheet, right? but they are not doing it. They have been trying to they have been reducing it, right? Then and uh those volumes for the 3 months bonds, right? They actually soak up by this reverse repo uh agreement that has been drawn down, right? So there will be a period, right? So in September there will be another Fed meeting, right? I believe at that point in time there will be a Fed rate cut, and what's going to happen from now to then is that the market will crash, right? And then the bond yield will go down. Okay, the bond yield will go down, and then by the Fed meeting, the September Fed meeting, then they will come in and announce the rate cut, right? Because the rate would already have gone down to below 4.25, right, and stay there for a while. In fact, if the market um, crash enough, you may even get a 50 basis points cut or even more. Okay. I have explained this rate cutting before in last year in one of my much earlier video. Right, I will not do it again. But if you guys want it, let me know. I will explain this again in detail. Now, okay, so from now until Fed, right, to summarize, is that the market will crash, right? Now, bond yield will also crash. Okay, bond yield also go down together with the market. And then September itself, you will see that the FOMC meeting, they will announce the target rate cut. So that's it for this very long video where I explain how the whole market will move, right? And from now until the Fed meeting, at least in September. Okay, so as usual, good luck in your trading, and that's it. Thank you.